Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please subscribe to the channel and like the video. These videos take a long time to make. This is how you learn, understand the process of before, during, and after the trade. So this is why you need to watch these. These are very important. I did finish the week with 27 wins, 6 losses for a win rate of 81.82%. So I did. It was a good week. I can't complain except Wednesday. Wednesday I did not do well, so we'll talk about Wednesday when I get there. But we'll get into the recap. I feel like I'm forgetting something. I don't know. Whatever. I said in the trade ideas room, SPY calls over 414, SPY puts under 410. Now, this is the 414 level right here. This is the 410. So I said that right around this time. So I was looking at, SPY has been trading from 10 to 15 points in a day. So I wasn't worried about chasing it up here. So when it opened and it started to break down underneath the 410, I took it right away. Took the 410 puts at 247. And they went from 247 to 316 in that little push. Then I ended up taking SPY calls at 943, which is right up here, right when it came through the 20 EMA. That is where I grabbed the 413 calls at 250, and they went from 250 to right around 280, I believe. So then I went back into puts again at 1007, which is right here. 1007. Right here. Wait. 1007. Right here. Oh yeah, I know why I took this. Let's see. 410 puts, 1007. I took it up here somewhere around the VWAP rejection. Because when they start coming back down right away, I do end up taking the retracement. I just went so back and forth on this, thinking it was going to rip in either direction. Is this the day I posted that there was a huge no, there wasn't. I thought this was the day that I posted there was a huge put to call ratio, but there wasn't. But I kept flip-flopping. I mean, I grabbed it here, a little scalp on the little pop here that I thought it was going to come back down, so I grabbed it again. Then it ripped on me, and I ended up holding it. I ended up holding it, then it finally came back down, and I was able to get out because I had the 410 puts at like 234, and then it finally went to like $3, so I was able to get out green. But it did go against me. I probably should have stopped out right up here, but SPY, I mean, I feel like that you short the pops. If you grab puts, they're eventually gonna pay off, but don't hold blindly because I said that. Remember, this is not financial advice. It never is, never will be. This is just my trades and what I'm doing and how I'm trading. This is my journey, basically. It's my like diary or journaling, whatever you want to call it. So I'm just letting you guys inside my little journey. And sometimes I get them wrong, sometimes I get them right. But sometimes I'm stubborn and just I just feel like that any pop that happens is going to end up just dropping eventually. So I'd rather be on the put side than the call side. So yeah, so they did go from 234 to $3 down here. So, but then I end up grabbing, let's see, SPX puts at 1249. Which is right here. Looks like, but I mean, I understand why I didn't take it right here, because it came down and it went up to VWAP, rejected harshly, then it came back up quickly, And these are the kind of moves that I end up falling for sometimes, because when they go and get to an indicator, or this is, you can see the 20 EMA is the light blue line, and then you get the dash line, the dotted line, which is the VWAP. And it comes down, then it comes back up quickly. Usually when they come back up quickly, they end up breaking. So I can see why I would take it right there, because it just seems like a fake out. I'm surprised I didn't take it right here, to be honest with you, because it went up here and rejected harsh. I mean, that usually is a sign that it's going to end up dumping. Plus, you have a head and shoulders. You get the left, you get the head, and you get the right shoulder. So I think I even said in the room that there was a head and shoulders forming. So I took the SPX 4100 puts at 1249, which is right here, right at the neckline of the head and shoulders, and I got them at $10.80. I played them very, very expensive. SPX has been super expensive, even on expiration day. I mean, you play SPX like even in the last hour, and at the money is still like $6-8 when they should be right around close to like $4 at the last hour or so. But it's the IV is through the roof, and SPX been very, very expensive all week long. I feel like it was more expensive after FOMC than it was before. Could be just me, I don't know. But yeah, they went from $10.80 to $22 and $22.60 on that drop right there. Then I ended up grabbing puts at 313. I played a lot of puts the last 45 minutes. Okay, so at 313 I played 4100 puts again. 313, where is this? 313. Oh, right here. I might have to go down to the 1 minute so you guys can actually see. I have to actually go out 5 days though, because you're probably not going to be able to see that. Let's see, what day is this? Is this the second? Okay. Okay, 313. 313. Okay, let me bring this one over to the 10 minute, because I don't look at the 1 minute. What was I looking at right here on the second? Second right here. Yep. Okay, let's see what I was looking at on the second. I was probably looking at this 413 area right here. As you can see, it's a pivot, it's resistance, support, resistance, and it came back up here. So yeah, I was getting right around. No, I wasn't even at the 413 area. Let's see, 313. It's around 310. Where is 310? 410, I mean. Oh, I see right here. This is where it came back up and broke the neckline for the head and shoulders, and you got VWAP right here. So I did get this little play right here. You can barely see. You can't even see it on the 10 minute. But yeah, I used the 410 where it was retesting this area right here in VWAP. And I got the 4100 puts at 650, and they did go from 650 to 850. So it doesn't look like much, but that is what it was from 410.68 to 409. So it's almost $1 move. And when you have $1 move on SPX, that will end up moving at least a couple dollars, and it did move from 650 to 850. So it looks like it was a very dangerous play. But if you play SPX and you stick to the 50 cents to $1 rule and not try to hit home runs, just try to focus on the base hits, that you'll end up doing very well versus trying to nail home runs, because the chances of you nailing a home run is probably 1 out of 10 versus taking base hits, which you'll probably get 9 out of 10 times. So and you could definitely see that was a very, very high risk play, and I'm glad I did that. But it looks like I did it again. I grabbed him again at 323, which is rate 323 right here. This is a 412 area. Now this is the area where the top of the shoulders were. This is the pivot right here, 412. Let me just double check. Yeah, 412. Yeah, the 412, 20-ish. Yeah, so this, yeah, that's right in here. I can see why I took it there too. I tested the neckline and it broke out. Then it came up to the where the pivot is, the 412, 50-ish area, and I grabbed the 4100 puts this time at $3, and for some reason I 323. I grabbed it right here, and because it popped up, the pullback right here wasn't enough to make them break even, or even come back down. In fact, I mean, you know what? They might have came close to breaking even right in here, but I don't know. This little chop, that's all it needs. Those few minutes of chop will kill it. On SPX, it's all about timing on expiration day, so you get to time these perfect. I kept trying to time the top, which this one I did get, but this one I got so unlucky. So, but they were only $3, so I wasn't too worried about it. I had a pretty good cushion already for the day, so I wasn't worried about that loss. Then I ended up taking puts at 341, which is right up here. Right here. Let's see where's 341. 341. What level is this? 313. 413.50. Oh, yeah, 413.50, which is right here. It's at the top. So I got it here, then I got it up here near pre-market, right in here. It did reject a little bit, so those puts I ended up doing okay on these ones. I had the 41.30 puts this time at 420, and they went from 420 to 940, and that drop right there. So I did try to catch the top. I did actually do well on this time. I didn't on this one, so yeah, a couple of dangerous plays right here. This one worked out for what, $2 move. Then this one took a loss. Then this one right here. This one won 100% because I timed that pretty good. I actually was surprised that it dipped, that it turned around and ripped. And that's the one thing that SPY has been doing lately, end of day. Usually the last, I don't know, for a long, long time, that if SPY rages like this, I'm going to switch back over to the hourly in 10 minutes. If SPY rages like this at the end of the day or dumps hard, that you usually end up seeing a reversal the last 10 minutes. Let me get back up right here. Yeah, usually you get the 200 EMA. Usually you would see, you know, a run like this. Then at the end of the day, you would see a dump. You'd see profit takers. But what's been happening is that if it's going a certain direction, the last 30 minutes, that the end of the day will keep going. It's been like that for like the last week or two. And it's been crazy because you would think, I mean, look even right here on Friday, you have this massive down day. And I think that I was trying to play the bounce at the end of the day. If I go back and look on past Friday, if I look at my notes, yeah, last Friday I took 41.75 calls at 344 end of day. So yeah, right here is where I grab calls, because usually traditionally when you have 426 to 413, that's a 13-point drop. On a Friday, you're going to have shorts cover, and the last 10 minutes you see that pop, and it didn't pop. It just dropped a lot more. And that's what's been happening a lot lately. So you can't sit there and look and think, okay, it's dropped so much at the end of the day that it's got to bounce. And normally 90% of the time it will. But the market, the way it's been lately, if it's in a direction, the last 10 minutes is going to continue in that direction. Until it doesn't, I'm going to just assume it does and just look at certain levels. But that's what SPY has been doing lately, and it's kind of very annoying, especially these kind of moves are very predictable for end of the day short squeeze, and that's what I was expecting on Friday, and it did not, and it just dumped more, and that's what's been happening. So same here. This time it did dump a little bit, but it ended up squeezing more. It's very, 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 very annoying. So let's see, Tuesday. let's see, where is Tuesday? I had to go look at something really quick. Tuesday. Not looking forward to going over FOMC. It's going to give me PTSD or something. There we go. SPY again. I did nothing but SPY all week long. Okay, make sure I get the right day. Now SPY stayed in a channel for the most part, so it was easier to trade. I only had what I have 6 wins and 1 loss on Monday. Yep, 6-1. Then I went 7-0 on Tuesday. Now Tuesday pre-market room, trade ideas room, pre-market room. I should just call it that. Let's see. Netflix calls over 202 and SPY calls over 416. Let's see. I took SPY puts at 945. Let's see, 945. I went back and forth here again at the same thing. Okay, I'm gonna have to switch back over to 10-minute. I'm trying to catch the direction before blow it up here. This makes it a lot easier for me to show you that the 1 minute when maybe I should just stick to the 1 minute. I don't want to though. Not for trading. Don't get me wrong. I'm not going to trade 1 minute. I hate it. It's too much noise. Okay. Let's see. I took 410 puts at 945, which is right 945. 945. Where are you? Right here. I took it right in this candle, right when it broke down right here. Okay, so I grabbed it right when it broke the ORB, which is open range breakout or breakdown, depending on the direction. You had the first candle put in, and as soon as it came down, broke below it, I grabbed the 410 puts at 285, and then went from 285 to 309. Not much of a run, just a little bit. Then I switched to calls at 957, which is right here. When it broke over these group of candles right here, I did grab it right 957. Grabbed in this candle right here. I probably grabbed it in this one. Because sometimes there's like a 30-second delay or something from, I have to type it and post it. And I try to copy and paste it as much as I can. And try to get it out there as fast as possible. One of the days this past week, I think it was Friday, there was some major typos. I do apologize for that, but that's the part of trying to get it out there as fast as possible. Usually if I'm anticipating a play, I'll have it all pre-written out and ready to go. But when it's like this, back and forth in a small time, that I just have to try to copy and paste and hope that I get it right. And that's why if you see a call and the numbers don't match up, tell me right away, because 99% of the time it's a typo. And I had quite a few, I think, on Friday, which I didn't mean to, but it is what it is. So yeah, I grabbed the 420 calls at 957, which is right here. It's probably more or less right here is where I grabbed it. And they went from, let's see, the 420 calls went from 230 to, where did they go from? 230 to 369 in that little push up. So that little breakout right here, well, actually this whole breakout right here. All right, let me see, wait a minute here. No, went right from there, from here to here, not from here, from here to here. Then I took, let's see, 40. I jumped to SPX. Now, SPX has been having expiration days on Tuesdays now, and it's supposed to be having expiration days every single day, but they don't have Thursdays yet, so I think that's coming this week. Maybe. We'll have to see, but yeah, I grabbed the SPX 4100 puts at 1009, which is rate 1009. Right when it rejected right here? No. 1009. Okay, wait a minute here. I gotta back up. I think that I made a mistake. Yeah, this is the one where it broke out right here. Yeah, this is the one that went from 957 to the 420. Yeah, okay. I'm sorry. So I was for looking here. Now right here is where I grabbed it when it broke over this candle right here. These are the 420 calls, and then I grabbed the 4100 puts. I grabbed them on this candle right here at 1009, which is what. So I grabbed them. Oh my god! I grabbed puts here. Then I grabbed the calls here. Then I went switch to puts again right here. I did that on Monday too. I'm trading too much of this crap right here. I need to stop doing that. But yeah, I think what I'm trying to do is I'm trying to catch the direction before it pops. So I did catch it there, did catch it here. So this is where the 420 calls were. Then I ended up grabbing them again down here. 4100 puts. No, not again, but this is the first time I grabbed SPX. 4100 puts at 1009. So right here, on that little drop, I probably got them when it went underneath the VWAP. Is probably where I grabbed them, because I grabbed them at, let's see, 1009. Where is 1009? Right here. Yeah, the push through VWAP is where I got them. Of the 1 minute and 10 minute VWAP is going to be the same on all time frames, but yeah, right here is where I ended up grabbing the 4100 puts, and they went from 4100. They went from 440 to 540, only $1 in that little push. But if you stuck to the rules of 50 cents to $1 move, that you would have had no problem. You would have had a nice one right there. So then I ended up taking puts again at 1039, which is, let's see, probably should be right up here. No. 1039. Okay, right here. Let's see what that is in the 1 minute rate. Oh yeah, right underneath the scoop candles right here. So I grabbed it right under here, right in here somewhere. I probably waited and grabbed it right here. Let's see what the time. Yeah, 1039. Probably, yeah, right here is probably where I grabbed it. 415, 50 area when it broke below this area, because you get these top candles. Look at it, it's rejecting this pre-market high. Rejected it. Well, I get a harsh rejection here, harsh rejection here, harsh rejection. This is what SPY's been doing a lot, is that it's been rejecting hard, and when it does, it just when it pops a little, it rejects hard. So this is what I've been looking at all day long on Tuesday. I hate seeing this 1 minute. I'm going back over to the 1 hour and 10 minute. It drives me crazy. I can't. Throws me off. It's too much noise. So yeah, blow this up more. Oh, a little too much. Come on, a little bit. Okay, so yeah, I got it right here. The 4100 puts at 440. No, the 4120 puts at 430, and they went from 430 to $7. So they went almost 100% right there. More like 80%. If I had to guess off the top of my head. So the market is still in a short the pops cycle, so I just keep doing that. And but the only time I'm really looking at calls is when you have like high put to call ratio. I will actually look at it then. But keep shorting the pops. I don't really think that if you're gonna play calls, you better be ready to take them really, really fast in case it does go against you. So yeah, puts here, puts here, calls here, puts here. Yeah, puts here, calls, put, then a put, then I grabbed see, puts at 1 o'clock. So I waited. I didn't trade any of this. I waited till 1 o'clock. 113, which is right here. Yeah, I grabbed let's see, 4160 puts at 410 at 113. So I grabbed the double top, and I kept seeing right here. It gets to this 1850 area, rejected. It came back up and rejected. This is where I grabbed it again. So they went from, let's see, 410 to $12. So they went let's see, almost 200% right here. There was a nice little rejection too. I actually nailed the top of this and got this all the way down to the 200 EMA. Then I ended up grabbing, let's see, puts again at 252, which is right. 252, is this it? 252. Right here. Oh yeah, see right, okay. This is where it broke down. You can see all these candles right here. Then it broke down and made that little massive drop. Then it came back and retested this area, this 417.80-ish area, 417.50-ish area, and it rejected. So I grabbed the 41.60 puts at 252, which is right in this candle right here. And let's see, they went from 440. Actually, the other ones went from 410 to 412. Yeah, 410 to 412, and these one went from 440 to not 590. Not much of a move right there. Then I ended up grabbing them again at 320. Yeah, when it bounced back up. So I grabbed it here. Got that little bit of a drop, then it bounced up. Yeah, see, I got it here. It went up against me just a little bit, then it came back down. It's able to sell in this red candle. Then when it retraced back up, that's where I grabbed it again. I grabbed the same ones, the 41.60 puts at 350, and then went from 350 to $6. So almost another 100% move right there. So whenever you have these harsh red candles like this, and then it comes back up to where it was, I like to grab them on the retracement, because I usually come back down and drop, but sometimes they do go against you. Look right here, they went up, it dropped, then it came back up, then it dropped again, then it dropped here, and it came back up and dropped again. Same here, it dropped, and it started to come back up, and it quickly got slammed on, got crapped on right away. And so yeah, that was a much smoother day. I've been trying to stay away from parts of the midday because of SPX has been so expensive, and I'm afraid that they're going to chop it and just kill all the premiums. But because it's so high, and I feel like it's a implied volatility trap where the premiums are so high because there's been so much volatility that one of these days they're just going to chop it, and they're just going to steal all the premium, and you just going to end up getting crushed with IV. And I thought for sure that it was going to be this day they were going to chop, but it didn't really. So yeah, now on the Wednesday, which is the day I'm not really looking forward to, Wednesday FOMC. I did not take any trades whatsoever into FOMC. Usually it's very choppy. It's not worth looking at. But it looks like it moved a little bit. If I was to take any of the plays, which I didn't, I would have taken this right here, the breakdown of the 416 area, because you had a drop, came back up, rejected the 20 EMA. I wouldn't have got it, the rejection of the 20 EMA, I wouldn't have got it right here because it's so close to the pre-market highs, and it could, and they like to, if it does like to move on FOMC, it likes to run up into it. So I always like to call it, like, you know, they're running it up to make it look like the drop won't be as bad, but they didn't. But I definitely would have grabbed it underneath these candles right here for a drop, and it did drop. And you could have grabbed it again right here over VWAP, over the 20 EMA, and for a push. But I didn't grab anything. I preferred to take it slow and just I'll just wait for FOMC, and that's what I did. So I ended up taking, let's see, the FOMC SPX strangle play. I had 4,100 puts and 4,250 calls. Now I had to play way outside the money because it was so expensive. And I was looking back before I played. In January, I played 200-point range. I was playing 100 point up for puts, 100 points down in calls, and I just it was a 200-point range, and it moved, and I did really well on that. It's just that when you're playing a massive range like that, you get kind of nervous that it's not going to work out because of the way how expensive they are and the massive swing that you need. But you know, FOMC, I've been trading FOMC for a long time, at least 4 or 5 years, and I've only seen FOMC flat maybe once or twice, where it just doesn't really do anything, but you always get a big move. And playing FOMC is very, very tricky, and a lot of people don't understand how to play it, and they don't understand what I'm doing. So FOMC, you get 2 to 3 plays. You get, especially some FOMCs, you don't have Powell speaking. Sometimes you don't, and sometimes he does. So you need to figure out if he's has a speech or not. Now, whether he has a speech or not, you usually get 2 to 3 moves. You get the one of the initial reaction at 2 o'clock. Usually the first move is the wrong one, so if it pops, it's going to end up dropping. If it drops, it's going to end up popping. And then you get a 2:30 move, which is his press conference. Then you get, another, 3 o'clock move sometimes, where if it drops quite a bit, it'll have like a dead cat bounce around 3. Then it'll around 3:30 or end of day, you'll get another one. So there's at least 2 to 3 moves. There's definitely one at 2. If there's a press conference, there's another one at 2:30, 2:45ish. Because usually when he starts speaking at 2:30, it doesn't really go right in right away. It doesn't react right away. Sometimes it takes a few minutes for him to start talking and say something stupid, or whatever the market likes. Then you usually get one at the end of the day. Another reaction end of the day. Like if it goes in one direction too much, that they'll cool down, and that's what I was trying to do. But now FOMC, the thing I want to talk about is that they raised it 50 basis points, and so the market freaked out about that a little bit. Then they said the next FOMC meeting that there was the chances of having another 50 basis points hike the next FOMC was dramatically increased. And somehow Powell said that they're not thinking about a 75 basis points. And the market is responding that it's raging because the FOMC is not going to go up 75 points. The market is ignoring the fact that the probability of a 50 basis point rate hike next FOMC was dramatically increased, because it wasn't even thought about at that time, but now it's dramatically increased the odds of it. So the market reacted that, okay, it's not going to be 75 points, so that's a good sign. So the market was taking it as a good sign that 75 basis points is better than 50, but they were ignoring the fact that it dramatically increased the odds of having a 50 basis point rate hike the next one. So with that said, let's get into the play. I had the 4100 puts at 490 and the 4250 calls at 620. Now, like I said, the first move is the wrong one. So when the announcement comes out, the first thing I'm going to do is it popped. So the first thing I'm going to do is I'm going to dump the calls, and that's what I did. I dumped the calls on the first pop, and I held the put. So I end up the calls ended up going. Let's see, the calls ended up going from 620. They ended up going from 620 to. Let me just double check my exits on what I did there. Let's see. Where is the the calls actually went up to, let's see. I dumped all the calls at 11:50 on the 4th, right? Yeah. So I got the calls at 620. And the calls went from, let's see, 620, and I dumped at like 10, 11, 11:50 in this pop right here. Yeah, 201. Yeah, 201. Yeah, you had literally a minute. That's why if you're going to play FOMC, you need to be super, super fast. You need to have your fingers on the trigger. You need to have things ready to get in and out, because the first move will literally happen within 30 seconds to a minute. So they went from 620 to actually like $19 or something like that. But yeah, I got out like 11:50. So I sold into the first pop. I held the puts. Then I ended up selling the puts right around 750 or so. Um, yeah, let's see. Let's see the timestamps and stuff. 235. Yeah, right there. What, 235? Is that what I said? Yeah, 235, which is right here. This is where I took the lap. I dumped some right here. It popped up, then it came back down, and this is where I dumped the rest of them. So I was able to, because I had the puts at 490, and I was able to dump them out at like what, $5.30, $6, and 750. So I was able to dump all the puts right there, and it found its bottom right here, right at the pre-market. The lower day is where it bounced on SPY. Now I spent the afternoon trying to call the top because I was playing the fact that the FOMC was bad news. It was not good news. And it reacted like, oh, we're not going to get the 70 basis points, so that's good news, even though 50 basis points dramatically increased the chances. And then market is ignoring that. It's always was looking at the silver lining, even though silver lining was kind of stupid. But I grabbed 4150 puts at 244, which is right here. And I actually, I think I actually sold some in the green, but yeah, I sold some SPX at 490. I didn't take a complete full loss. I did sell some right there. I wasn't fast enough to get the rest of it, and it went against me right away. I was able to get out a little bit, then it just raged on me afterwards. So tried to get it right there. It went against me. I tried to get it at 259, which is right here. I got to the 425 level. And let's see, because you're talking from what, 414 to 425, you're talking almost 11-point move. I grabbed the 4200 puts at $4 and it ripped on me. It came back down. I grabbed them again at 319, which is right here above this candle, because right when I got to the 425 area, it thought it was going to like come back down. It ripped up. Then when it started to come back down, it ripped up again. I grabbed it right here. A different one, a 4250 puts this time at 760, and it just kept going. Then I grabbed it again at 335, which is right here. And it just kept going. This thing just kept going and going and going. And I took 4 losses in a row. I don't think that's ever happened to me. Usually 2 in a row. I usually get the third one right. And I think that's why I kept going, because I knew that, okay, I got 2 wrong. I'll probably get the third one right. And I got 3 wrong in a row. And I just kept stepping in front of a truck that just would not stop. And it's just the market was ignoring that there was not good news. And I don't, the market's just stupid sometimes. And it was acting very stupid. So that was my bad Wednesday. But the funny thing is, the next day, it lost all its gains. I think the market realized, oh, wait a minute here. We just increased our rate hike to 50 basis points has been dramatically increased. That the chances of that happening is a lot, and the market's just realizing, oh, that's not a good sign. But they were too busy celebrating over the 75 points, and they weren't really thinking about the other part of the equation, which that it's not good. So I was like, I even said in the room, watch it give it all back, and it did. So I played calls and tried to catch the bottom all the time on Thursday. Let's see. I played 422 puts. Actually, let's see. Thursday, traded is room. Excuse me. SPY calls over 427, and Apple calls over 165. Now 427 is this area right here. in case it, SPY just had a massive, massive, massive run. So I was thinking, okay, we're gonna have a choppy day. We're gonna range, and at first that's what I was thinking. We were gonna range or possibly have like a pop and drop. I was thinking, okay, if we get over 427, we're probably gonna go up to 428, 429 area pre-market high, or previous day's high, then slam. So I was thinking a pop and drop, but it just dropped right at open. So when it started dropping at open, I grabbed puts at 944, the 422 puts at 305, then went from 305 to 762. All the way through, and I tried to grab I grabbed calls at 1043, which is right here. Now, why did I grab it right there? 1043. Let me go back to 10 minute on this one. Actually, I don't need to go to 10 minute on that one. Let's go 1043. Where is it? Right here. This is the area where yeah, this is where it was finding support right in here. This 416.40 area from previous days. Yeah, the 416 area. So yeah, I grabbed 418 calls at 350, and then went from 350 to 397, and that little bounce right there. Now you're talking a, let's see, 426 to, you're talking a 10-point move in an hour. That's like really, really, really extreme, and that they should have like some kind of a dead cat bounce. So I was just waiting for the right levels. And first level, like I said, was the 416 area, which is right here. As you can see, it was support right here, and let's see the 416 level. And it was it was a pivot right here too. You can see it was resistance and support. So it was a pretty big area, 416. So that's why I grabbed calls, enough for, almost a 50-cent move on SPY. So that's pretty good. When you can get 50 points, almost 50 points, it's 50 cents out of SPY. That's equivalent to like $5 in SPX, because SPX moves 5 times faster. So it did end up breaking down more, and I grabbed the same calls, the 418 calls again at 1108, which is right here. And one of the things that SPY has been doing is that when it has a nasty move, it likes to make a fake green candle, which we grabbed, we sold into. It'll come back down and take out short stops for the bulls, because that's just what the dirty things they like to do. And I grabbed them again at 1108, which is right here. And I had the 418 calls again, this time at 265, and from 265 to 343. Almost $1 move. That's good on SPY. That's $10 on SPX. But this is Thursday. They would, if I remember correctly, SPX was like $40. If I remember correctly, on a non-expiration day, they usually read around 25 or so. But they're super high this past week. So I did catch that move. Then I ended up buying calls again at 1152, which is right here. I grabbed them right at the RCT trend line. I grabbed the 415 calls at 340. When it gets me a little bit, then an 8 came up and ended up doing pretty well. So yeah, I got them at 340. Went from 340 to 482. So almost $1.40 plus move on that. So that was a nice little play. Then I ended up grabbing 410 puts at 232, which is right 232 right here. Oh yeah, because it came up, rejected 20 EMA. You have this harsh red candle right here, back to the lower day. So I grabbed the 410 puts at 317. It popped up a little bit, then it ended up dropping. So they went from 317 to $4. So you can't have too tight stops on this kind of volatility, because if you do, you're going to get stopped out and you're going to take losses like crazy. You either just got to trust the system and trust your timing and trust that what you're seeing is going to pan out. And if it doesn't, if your stops have to be too too tight, or you're worried about the fluctuation, then play smaller where you're not worried about it. So because the volatility is too much, you're going to get stopped out like crazy. And yeah, I got it right here. Most people probably would have got stopped out right here. But hey, as long as it stayed underneath this lower high right here, I wasn't too worried about it. Even VWAP, I mean, I give it some room. And plus, you know, all the pops have been getting hammered on all week long. So it is what it is. So, okay, now on to Friday. I took, let's see, in the trade ideas room, I said Roku puts under 100 and Tesla calls over 880. Let's see, Roku. Now at Roku under 100, as soon as it got under 100, I had the 100 puts at $1.94. Roku, the only bad thing with Roku is that the spread is really, really bad. I just waited for them to tighten up just a little bit. I don't think I got that great of a price, if I remember correctly. But they did go from 194 to 650, so they went almost 200%, over 200% on that drop. They had a nice, nasty little drop on Roku. So 100's been a pretty big area for Roku. So if it broke it, it was going to have a nasty drop. And Roku is just, anytime it has a pop, it just it gets just hammered on. So the market's been very weak. So I just thought, okay, it gets underneath the 100, it's going to end up having a nice little drop, and it did. So then I ended up playing all SPX on Friday. Played a little bit out of the money, but it is what it is. So I played, let's see, SPX 4000 puts at 952, which is down here. I probably should have played a little up here, but I was in the Roku, so I wasn't really paying attention. But I did chase it down here. The 4,000 puts went from 770 to let's see, $9. You stick to the $1.50 rule. That you'll end up doing pretty well. You would have got it. Then I ended up taking puts again at 1009, so which is right here. Rejection off VWAP. No, 1009 right here. Double not the rejection off VWAP. Rejection of higher day. I grabbed the 4,000 puts at 480, and then went from 480 to 650 right here in this little drop. Then I ended up grabbing 40-20 puts. Now it had this drop rejection from higher day, and if you stick to like the $1.50 to $1 rule, you would have got it, because it went from 480 to 650. Then it popped back up. When it popped back up, I reloaded the puts, but this time I got close to the at the money, which is still pretty far away. I got the 40-20 puts at 1020, which is right here. And 1020, well, I guess I got it down here. I thought I got it up here, but anyways, I still got it in this area, and it still dropped. But I had the 420 puts at $3, and they went from $3 to $7.20 on that drop right there. Then I ended up grabbing 4,200 calls at 1046. Now you had this rejection at higher day, bounced off VWAP, came quickly back up to higher day again. I grabbed the 4,200 calls at 380, and they went from 380 to 750 in that little pop right there. Anytime it rejects higher day, then it bounces back, comes back up really, really quickly. It's likely going to break, and it did, so I got that move. Then I ended up taking calls again at 1114, which is right here. Came back because we got this moving to pull back, and it came back up to break. So I was like, okay, they're gonna push a green. So at the 4,200 calls again, this time at 530, and then went from 530 to 1060 on that push right there. So that was a nice little play on that. I figured, you know, they were gonna push it green, and I was thinking at this point in time that they were gonna turn the weekly candle green, and they're gonna try to make it a nice weekly green doji candle for the week, but they didn't. I really thought they did. Maybe it came so close, but then they dropped at the end of the day. But yeah, so got that and rejected the PDC. And then I took Tesla. Tesla was the next one. Now Tesla I shouldn't have taken, to be honest with you, because SPY was up so much. I had a feeling it was going to reject. I grabbed it right here. Let's do that. 1130. 1130 right here. I grabbed it closer right up in here because it was right at high day when I grabbed it. And you had this big cup and handle. You get a cup, you get the handle. I thought for sure it was going to rip. So I got the 900 calls at 335. then it just dumped. Then it started to get a little traction, then it dumped, and it just chopped, and then it dropped. So I really thought that was gonna break out here. Then I was like, okay, you know, maybe if it does bounce here, it's not that far away. Tesla can definitely move 30 points very, very, very easily. I mean, it did down here from 940 to 980. That's 40 points in a couple candles. I mean, it could definitely do that and go in the money, but ended up being a loss. But I had such a huge cushion that already on the day, so I wasn't too worried about this play. Then I ended up going to SPY puts at 1158, which is, let's see, 1158. 1158. Oh, this is where it broke down right in here. I grabbed it in this candle right here. I grabbed the 40/50 puts at $5. This is where it dropped down, came back up to VWAP, back to VWAP, and it bounced a little, came back down. I actually was thinking about puts right here. And then when it popped up, this is when I grabbed it again, right when it popped up into this candle. And I grabbed the 480 puts at $5, and then went from $5 to $6. How did I go from 5 to 6? I must have got it 1158. I must have got it closer to down here. 1158. I probably did grab it down here. I probably did grab it right around down here. Yeah, but they went from $5 to $6, so they made the dollar range, and I was able to get in and out. So, looks like I probably did get it down in here, because at 11:58, this is 11:50 to 12. So I must have got it right in here. I must have sold into this candle. I must have got it right here, because you can see the candle here and the bottom of this candle, the body, not the wick, but the body when it broke down right there. That's probably where I ended up grabbing it right there. Yeah, because that's something I would have grabbed down here too, but glad I sold when I did, because it popped and it came back down. But it looks like they still wouldn't have gone in the money, because it's too much chop, too much retracement right there. But yeah, got $1 out of that. Then I switched to calls at 331. Where's 331? Right here. Because at this point, you know, I probably should have taken this too. I should have taken that. But I've traded, what, like 7 or 8 times already. So I was like, okay, getting a little fatigued, and like I was up, so I was doing really well with minus Tesla, and I probably didn't want to take any more chances and wanted to sit out the rest of the middle of the day. But I could have definitely taken this PDC rejection right here. I definitely should have. That would have been a good play. So, but you also have another cup and handle. You get a cup and another handle right here. I mean, that could have gone either way, but if you waited for it to actually reject the PDC and come underneath it, you probably grabbed it right here. You could get that red candle for rejection and grabbed it right here underneath the 412.60. You would have been fine. You could have got the rest of that candle and this drop right here, but I kept looking at the end of the day. I kept thinking, okay, we're going to push green. It's Friday. We've had a really wild week. We're down quite a bit for the week, and it would be funny if the SPY turned green for the week. So that was my mentality behind it. It's still staying in a range day. It's not a massive down day or a massive up day. So I was thinking, okay, it's going to go green for the week. So right at the end of the day, 3:30, I grabbed 41.20 calls at 450, and they went from 450 to $15 on that push up. It did get green because I think it needed to close over like 412, 10-ish or something like that. And it did turn green, and I thought it was going to stay green. Then they pushed it red. So it didn't end up being a doji candle either way, but still I thought it was going to be green. But had a nice, massive end of the day play on that. So that definitely was a great play on that. So the week, crazy week, very, very exhausting week. So I'm hoping that next week will be more of the same, lots of volatility. I love the volatility. You just got to learn how to play it, understand how to play it. Hopefully there won't be so many traps and stuff. This week there really wasn't that many traps. I mean, last week there was a lot of traps. This week, my biggest day loser, like I said, 4 out of my 6 losers were FOMC trying to get the top, trying to call the top. on a train that was just going in on bad news, and I just shouldn't have done that. But it is what it is, and probably got overconfident with it. But anyways, that's it for the recap. I hope this has helped, and hope to see you in the room, and thanks for watching.